Ladies and gentlemen, as Bitcoin approaches the $67,000 resistance level, which is absolutely necessary to take strongly before we can move to all-time highs, and as we approach the weekly candle close, which so far looks absolutely brilliant, we do have a few things to pay close attention to that could perhaps ruin this for Bitcoin, and those are the Federal Reserve's rightful leader, Jerome Powell, will be speaking about 12 hours from the time this video is posted. We also have unemployment coming in a couple of days here. So a big, few events coming through in the macroeconomic sector that are going to have pretty big impacts potentially on the charts that could either make or break Bitcoin in this situation. So it's very important to understand what the situation actually is. So before we get into the content today, I'm just going to quickly give a quick shout out to the VIP group on Telegram. Guys, we trade altcoins on Telegram. Altcoin trading signals are posted 4 to 5 times a week. They've been posted there for 18 months. And over 18 months, we've gathered a 77.5% win rate, which is pretty damn good. All those results are fully available, transparent in a PDF document. The pricing details are right there on the screen right now, or with the link below. You can actually see the group I'm in right now. This is the information and results group. Yeah, you can check it out if you're interested. All the links are down below. I recommend doing that if you're interested in altcoin trading plans and joining a more exclusive community. All right, so let's get into it today. We're going to start out with the weekly chart. Because this is kind of the bulk of the important content. We've kind of already looked into this yesterday, the 67K level. We'll look into it again today, don't get me wrong, but we've already discussed it a few times, and I think a lot of people are very aware of it. But we will look into that. But first, I just want to start off with the weekly chart, because it's really the candle structures that have been capturing people's attention recently. Obviously we have the 2-month candle, which has been capturing a large portion of people's attention over the past probably month almost at this point. Essentially, we had a 2-month candle, bearish doji formation. Is actually called a gravestone doji right here. It's an ultra bearish candle formation. That is true. But I think a lot of people in crypto YouTube, you can probably think of who I'm thinking of here, are perhaps overhyping how important that candle is. First and foremost, I've made a video dedicated to this candle actually, and why I don't think it's a threat about a week ago. But basically, yes, it is a bearish candle. There's no doubt about that. A gravestone doji candle is a pattern of reversal, and in a regular kind of market environment, if there was no other indicators that existed or no other trends that existed, yes, of course, we would be going down from that. The reality is, though, we can't just look at a gravestone doji candle on the 2-month chart and decide that's going to be the only viewpoint for which we're going to take Bitcoin at all. We can't just that's not the be all end all. It's a 2-month candle. First and foremost, the 2-month chart is a very, very abstract viewpoint to look at Bitcoin from. And you might be thinking, oh, well, that's a bit of a low blow criticism. Well, it's not at all, actually, because if you think about how the market moves, right? The market moves because people are looking at the charts and they're reacting based on the charts, right? So the charts that people are looking at are going to get the most reactions, and hence the popular charts, the 1 day, the 4 hour, even the weekly, even the monthly, those are the charts that are getting most of the attention, and most of the trading volume is happening based on the price movements of those charts. So when people are looking at the 2-month chart, how many people are actually looking at this chart? Not really that many. And if you want a more nuanced criticism, because I suppose you could probably brush that off somehow, the nuanced criticism is very simple and very clear. All right, there's 2 criticisms of the 2-month candle that is allegedly very, very bad for Bitcoin. First criticism is, of course, you can't just take one indicator like the 2-month candle and determine that's going to be the be-all, end-all for your Bitcoin analysis. That's, of course, it's asinine. That's stupid, really. And the second point, and perhaps the more, again, nuanced point, is that the 2-month candles have been extremely unreliable, even just looking at the cycle we've just seen. So we look at the past 3 years of price action, we look at the 2-month candles, okay? So let's look at them. We had a bearish engulfing candle here. It didn't lead to more downside price action, okay? We had a bullish hammer here or something resembling it. It didn't lead to a reversal to the upside. We had a very strong collective 3 bearish candles followed by two separate bullish doji candles. Not only did the first doji candle not lead to a pump, but the second one didn't either. And then we saw a bearish engulfing candle, which again is meant to continue the downwards trend. And after we saw the bearish engulfing candle, we then saw a bullish engulfing candle. So we had every single candle here, right? 1, 2, 3, 4, 5. You don't count this one, but 5 of them, 6 being incorrect in a row. So we've got a 0% success rate by looking at the 2-month candle so far. And you could go on. Bearish engulfing here didn't lead to downside price action. Okay? You could go on further. The fact of the matter is, none of these candles have worked, really, in recent history. So why are we expecting this one to? I don't really get it. But anyway, this video is not really meant to be a debunk video of the 2-month candle. I don't know how it's turned into that. Sometimes I get ahead of myself. But what I wanted to look at was the weekly candle. Because when we're talking about candle structures, right, obviously the big candle structure people are talking about is the 2-month candle. That's why I brought it up. But I think what people actually need to look at is the weekly candle. Okay, because this is actually a time frame where candle formations are proven to work at a much higher extent, as I just showed you, than the 2-month chart. And not only that, but it's a candle that is closing in just 15 hours. And we are seeing great bounces, right? We saw a very, very powerful, after a very subtle downwards trend with long wicks for downside representing lots and lots and lots of buying, lots and lots of support. We've seen a great bullish engulfing candle there, which would be an excellent way to start off a up or continue the macro upwards trend. So this weekly candle so far is looking superb. There's no doubt about that. Nice retest of that bull market support band, as well as the Bollinger Band center line, remaining above that Bollinger Band center line, which is critical of what you do in bull markets. You don't usually go below it. If we looked at the prior cycles, for example, you can see we don't usually go below that that Bollinger Band center line throughout the entirety of the bull market. Same thing in 2017, same thing even back here in 2013 cycle, but especially in 2017. And we can also, of course, just bring up the regular stuff that we talk about quite a lot on this YouTube channel. Obviously, you guys, if you've seen the channel before, if you haven't, I'm going to introduce it to you now. You may have seen this line that I draw quite a lot. It's the 13-year-long ascending support line on Bitcoin. That line, of course, has been around for the extent of Bitcoin's entire historical price action. It's been retested on this recent correction. We bounced off it very strongly, so it's great to see a bullish engulfing candle as a result of that. There's more. There's Pi cycle we can look at. There's lots of things we can look at. There's volume profile indicating 57K was a strong support zone. We looked at all this yesterday. The fact of the matter is we found a perfect spot for a bounce, 57K, and we bounced off it. And now we're seeing a perfect reaction. We're seeing a bullish engulfing candle forming on that weekly chart. Great to see. We've even got, if we go back to the weekly chart, a stochastic RSI cross coming in, a bullish cross in stochastic RSI, which again, generally isn't a massively reliable indicator. But again, if we look at the last 4 or 5 times it's happened, over here, it led to an uptick. Over here, it led to an uptick. Here, uptick. Right here, uptick. So last 4 or 5 times it's been very, very reliable. So that's great to see as well. So just lots of good stuff all around the board here on the weekly chart. Great to see. And I suppose here's where we can get into the shorter term charts. Then we're going to look into what the Federal Reserve is doing today. Right. So obviously doing very well on the weekly candle. It's not closed yet. It still could be ruined. Okay. But it's looking good at the moment. I will discuss that more in a second. Another thing that's looking good at the moment, although it's not quite over the line, much like the weekly candle, is actually the short-term charts, right? So looking into short-term 4-hourly chart here, we've got very important lines in red, okay? 57K being that major support zone we bounced off of, 61K being our range-bound support zone, and 67K, roughly, being our kind of short-term resistance zone. As you can see throughout this entirety of price action for the last month, we have been kind of rejected from that 67K level every single attempt of getting above it. So that's, of course, the neckline we need to break above. Yesterday, we pointed to the fact that this kind of resembles a head and shoulders formation, which means it's a bullish formation. There's lots of good news everywhere. We haven't quite cleared it properly or sufficiently yet. And we can actually see quite extensive sideways consolidation here. Now, it's interesting that we're seeing sideways consolidation at 67K, as well as, obviously quite a tense weekly candle close coming to a close, but not quite there yet. And the reason this is interesting is not just because it's interesting charts. It's interesting because we have such major events, or relatively major events, coming up over the next couple of days, but even in the next 12 hours. So perhaps this stagnation we're seeing at 67K on the way up is the market's way of saying, wait a second, let's actually hold up and wait and see what's going to happen with this, with the Jerome Powell speech, or with employment. Let's wait and hold back until that occurs. People are sitting on the sidelines until that actually happens to get the confirmation. So if we do see Jerome Powell come out and say, oh, look, we're going to maintain the status quo, and he's not going to say anything too controversial, he just keeps everything vague, and there's no real massive rate hike expectations to come sooner rather than later. If he does do that, you'll see very clearly, because the market will continue upwards, right? The fact of the matter is the trajectory of the market right now is upwards. On a macro scale, that's the case for Bitcoin. On a medium-term and short-term scale, that's the case for Bitcoin. Bitcoin's actually formed a medium-term upwards trend again, or a short-term upwards trend again. But also the S&P 500 is very clearly pointing in the direction of upwards. It's actually recently broken above its all-time high again. It's in all-time highs right now after a relatively strong or very strong move in the last month. So the market is trending upwards, and as long as Jerome doesn't come out here and say anything completely unexpected, then that's going to be the trend that continues to occur. So just really relying on Mr. Powell not saying anything too unexpected, and if he doesn't, I don't expect anything other than upside price action to ensue. But yeah, just waiting on that and seeing what happens there. Perhaps, you know, unemployment and FOMC meeting minutes, which is coming 2-3 days. You know, those are going to have 3 or 4 days, I should say, effect as well. But once we get past kind of Thursday this week, we're going to have no real major events for a pretty significant period of time. So the market's just going to do its thing. But until we get past that point, we are kind of waiting on that news and waiting to see what happens, because we're in the middle of a range here. You have to remember, right? We're not at the upside of the range at resistance. We're not at support. We're in the middle of a range fighting the midline resistance of the range. So we're very much in a point of, you know, let's wait and see here and settle back. That's what the market is doing. Now, I think this is a very bullish structure. I think the weekly candle is bullish. I'm macro bullish on Bitcoin. And I do think this 67K level will break decisively. Eventually, it just depends on, you know, whether Jerome Powell, as I said, comes out and says something that changes the macroeconomic environment dramatically. If so, we could see a pullback before that occurs. But I'm, of course, bullish on Bitcoin, and my invalidation zone for all of these claims, my invalidation zone for this bull market is a breakdown below 57K. If we lose 57K, I will probably flip bearish, or at least very cautious on Bitcoin and start to de-risk. Until that occurs, the macro still looks good to me. We're just waiting on these short-term events. We're looking at that 67K level very closely, and we're looking at that weekly candle very, very closely as well. But everything is looking quite good right now. Guys, before we end the video, I want to quickly say I won't be making a YouTube video for about 48 hours, maybe a little bit more. Probably maybe even 72 hours, 2 or 3 days, because I'm going camping, so I won't have reception or access to a computer. When I get back, I'll obviously update you on everything that's occurred. Hopefully there's not too much changes, and if there is, hopefully it's positive changes so we can recap it. But just keep that in mind. If you don't see any videos on this channel for a few days, that's what's happening. I'm not leaving you all. Before we end the video, guys, again, VIP group on Telegram, check it out. Spoke about it at the start. Another thing you should check out is the BitUnix exchange. It's a global non-KYC exchange. You can sign up from anywhere in the world. It's very much escaping the KYC regulation going on with big exchanges right now. I obviously also advertised BitGet and BingX. I still do. My links for those exchanges are down below, but I'm bringing BitUnix into this as well because it's a smaller exchange that, again, can escape some of that regulation. So, you know, take your pick. Which one do you want? You can choose. There's 3 of them right there, all of which have my referral links down below for exclusive rewards and discounts, and obviously helping out the channel. So check those out if you're interested in getting onto a new exchange. I highly recommend you do so. Then we also have the Crypto Academy's Become a Trader 10-unit course. If you want to get trading education, learn how to trade. It's a self-taught course, 40 hours of content. Great value. Check that out there. Bull market sale, limited time. Guys, thanks for watching. Hope you enjoyed. I'll catch you soon.